Is FHA evil? Is a conventional home loan, the only way to go? Well, in this video, we're going to tell you the difference between FHA and conventional, but more importantly, tell you which one is right for you. Now, there are some financial gurus out there that say FHA is never a good option, or some people say conventional genuinely is the only way to go. But what I'll do today from the perspective of a mortgage professional is share with you on the iPad the differences between FHA versus conventional and which one may be the best for your situation. Now, the first thing that we need to understand is the difference in down payment. As it pertains to FHA, we have a down payment of 3.5% of the loan amount that is required for the down payment. Now, for conventional, the down payment requirement, it's a minimum of 3%. So right off the bat, we see a difference in down payment from FHA to conventional. Conventional is a little less, so check one for conventional. Another thing that's important to note about FHA and conventional is that each one carry a very different PMI. That stands for private mortgage insurance. Private mortgage insurance, simply put, is an extra insurance that you have to pay if you don't have 20% down. The purpose for this insurance is to cover the lender. If you stop making your payments, if you foreclose or short sale, the lender is going to use that insurance to help cover some of their losses. And if you're putting less than 20% down, you have a higher chance of a foreclosure or a short sale, which necessitates this insurance for the lender. Bad news is you need to pay for it. So as it pertains to FHA, the monthly PMI factor, the number that we use to determine your monthly PMI, is 0.85%. For a conventional loan, it is roughly about 0.7. Now, this is as of today when I'm recording this video towards the end of the year 2020. These numbers do change from time to time, and these numbers are different based on your credit score, at least for conventional. For FHA, this is the number that you will pay on your monthly PMI regardless of whatever your credit score is. Whereas conventional, if you have a higher credit score, it could be lower. So what does this look like in reality? Well, let's bust out the calculator and see how this would impact your monthly payment. If you were getting a $300,000 loan amount, and we multiplied that by the 0.85%, that would give us $2,550 of PMI that you would have to pay on an annual basis. So divide that by 12, and that gives us $212.50 that needs to be added to your monthly payment on an FHA loan at a $300,000 loan amount. Let's take note of that monthly PMI estimate here. Now let's do the same math for conventional to see how it works out. On a conventional loan, again, we're going to use a $300,000 loan amount at 0.7%, estimated based on the 3% down, based on a decent credit score. We'll divide that by 12, and that gives us $175 that has to be added to your monthly payment for PMI. So right off of the bat, we are seeing that there is a difference in monthly payment for the conventional loan versus the FHA loan, all because of the monthly PMI factor. Now, the other thing to consider as it pertains to your monthly payment is interest rate. This is a big deal. If your interest rate is higher, obviously you're going to have a higher monthly payment. And it used to be that on a conventional loan, you could get much lower interest rates. And that's why a lot of people said conventional is better. But lately, over the past couple of months and even over the past year or so, FHA loans, those interest rates, they've been really close to the conventional interest rates. And right now, there isn't a big difference between the conventional or FHA mortgage rate. So if we're comparing the rate on the FHA versus conventional, you guys, they're similar. And there really isn't a huge difference. Now, there is a caveat, there is an asterisk to this, and I'm just gonna go ahead and write this down. A lot of that depends on your down payment, and a lot of that depends on your credit score. The one thing that conventional loans will do, if you put a little bit more money down or you have a little bit higher credit score, you get rewarded. Your PMI will be lower and your interest rate can also be lower. Now, here's a quick example. We're talking about low down payment options of 3% and 3.5% down. Well, what happens if you chose to put 5% down? If you put 5% down on a conventional loan and you had decent credit, you could get a PMI factor of not 0.7, but maybe 0.4. So here we are at $300,000. Multiply that by 0.4%, then divide that by 12, and that gives us only an extra $100 added to the PMI versus on FHA. If you put 5% down on an FHA, you're going to have to pay the exact same 0.85 PMI factor. It doesn't change. It doesn't matter how much you put down. It doesn't matter how much your credit score is. You're still going to pay that amount. So when you compare $212 versus a potential $100, that's a pretty big difference. Now, another thing to consider with a mortgage when you're obtaining one is not only the monthly payment, the interest rate, but what about the fees, the cost in obtaining the loan? Is one of these loans more expensive than the other? Short answer, yes. FHA loans are more expensive than conventional loans. For an FHA loan, they have an additional fee, this is on top of any other fees that are involved in the loan, of 1.35% of the loan amount. So 1.35% of the loan amount. And let's do this again for our $300,000 loan. That's a fee of over $4,000 that is required to close on an FHA loan. Now, the good news about this fee is you don't have to pay it out of pocket. Most people don't have to pay this on top of their down payment. In most cases, this just gets added to the loan amount. So when you buy a house and you get a loan of $300,000, on an FHA loan, the actual loan amount would probably be the $300,000 plus that fee. So that would be $4,050 for this specific situation. So what are the fees for the conventional? Well, here it is. Zero. That's right. There isn't a fee. There isn't an extra insurance. There isn't something that gets added to your loan amount for a conventional loan on top of the normal traditional fees. This is only for an FHA loan when we're comparing conventional and FHA. So let's go over what we've compared to this point. We've got FHA, we've got conventional. Is one evil? Is one significantly better than the other? Let's check. Now, if we're going to compare versus here, FHA, you have to put 3.5% down, whereas conventional, you can put a little less down. So check one for conventional. FHA, the monthly insurance factor, it's 0.85%, and conventional, depending on your credit score, it's around 0.7%. Again, check one for conventional. Now let's talk about the interest rates. Well, on FHA and conventional, they're similar, so no huge difference between the two, at least as of today's market conditions. And lastly, the cost, the fees involved. Well, FHA has that additional cost that gets added to your loan amount, whereas conventional doesn't. So again, check one for conventional. Now, if we're looking at this situation just on the math, it's obvious that a conventional loan is better than an FHA loan. But the difference between the PMI of 0.85 and 0.7 based on the examples that I've put together here, it's not huge. The difference in the interest rate based on today's market conditions between FHA and conventional, it's not huge. And honestly, in some situations, you can even get a slightly lower interest rate on FHA versus conventional. Yes, conventional loans have some additional flexibility and slightly better options that are available, which is great, but FHA loans aren't bad. They still have really great rates. They still have the ability to get a loan with a really low down payment. And they do allow for people to obtain a home, to get a home loan with a little bit lower credit score. And that's how you determine which one of these loans is best for you. Simply put, if you have a slightly lower credit score, if you have had maybe a checkered credit history, an FHA loan is likely going to be the best option for you. But if you've done a great job building your credit score, if you've done a good job maintaining awesome credit history, you're probably going to find more benefits going the conventional route. Now, here's a reality. At Stewardship, we help a lot of people get conventional loans, but we also help a lot of people get FHA loans. There isn't one that's evil. We think both of them are good. Guys, I helped my sister get an FHA loan. I wouldn't be putting my family members in a loan that I thought was really bad or harmful. Now, my hope is that you picked up this big thing, that, as we always say, personal finances are personal. So the FHA loan or the conventional loan, one of those may be better for you, and you determine that by weighing a number of different factors. So if you're curious as to what it would look like for you to obtain a conventional loan, and you want to see what the numbers are versus an FHA loan, look, we'd be honored to help. Go to stewardship.pro, click the blue schedule an appointment button, and we'd be happy to run some numbers for you to see which one may be best for you.